Hello, everyone. Welcome to your latest Arizona real estate market update. Okay, so whether you are buying and selling, or even investing in real estate, you need to keep an eye in on the market, right? And this information is today episode. We are going to review very different trend that happening in the housing market, and surprisingly, is happening in the middle of March 2025. So what it is, okay? Number one, we see an unusual price change in the market right now. Is that going to be a red flag to the seller, right? So what we are observing is what happened right now is actually the home price is shifting. Okay, it's not the kind of trend that the seller want to see, though. All right, typical we see that the average asking price per square foot to peak in late of March or April. But for this year, we actually already peaked in February and already starting declining. We already see some declining of average asking price. The seller already aware. Whoever want to put on the market the home right now, they have to be careful and they have to be a little bit less confident about the price. All right, this early dip suggests one thing. Okay, the seller feeling some pressure in selling right now. Couple things, couple pressure that we have to talk about is the more number of inventory on the market hitting on the market, right? And the demand is still not going up yet, regardless of how interest rate going low a little bit. Okay, what is the result from all of those new things? The buyers are getting more leverage. When we talk about leverage, that's mean negotiation power, right? And it's getting that means they're getting a better deal every day. All right. Seller, on the other hand, are growing some nervous. Okay, offering some of the concession like 20 or even 25,000. All right, to close the deal, to help close the deal. Otherwise, they stuck with that house. All right. So I already told this multiple times, but for the buyers, definitely this is a great time for you to negotiate. And don't be shy with any number. I just heard a previous client told me that they have a friend. Unfortunately, that person doesn't work with me, and the agent told them to not negotiate. That's so. I don't believe that. Even if the house just get on the market 1 or 2 days, negotiate to the price that the buyer comfortable nowadays. This is a time that the buyers actually for the last couple of years, right? The buyers feel maybe that's one of the reason why he recommends the buyer not to negotiate, because they used to the trend that the buyer has to be in the pressure, but no longer that's the case, right? This is the time to negotiate. Okay, of course, there's always an outliner. If it is an exceptional, desirable, like in the neighborhood that never sell anything, and this one is a deal, then we have a different conversation. But most of the time, 99, I believe 99% houses on the market right now, you have the chance to negotiate. Okay, for the seller, however, in the other hands, okay, pricing aggressively and making your home stand out is more important than ever. Okay, so your home has to be very stand out in nowadays market, and that need a lot of preparation. That needs a lot of marketing to make sure that your house is spotless. Okay, all right. Number two, what do we want to see? Comfort market index. All right, like I told you, if you watch my show, you are familiar with what it is, right? The comfort market index is created by a comfort associate, and that's basically a number telling you the market condition. Okay, it's measure the market condition, and it show the difference between the buyers and the seller in a certain market, right? So over the last over the past months, okay, we have 12 out of 17 cities that's actually become less favorable to the seller. All right, only five cities have improved for the seller, and we're talking about some of the biggest. decline is like Queen Creek, negative 9%, right? Tempe also negative 9%, and um, other cities also decline very crazy as well. Okay, right now we have seven cities that in the seller's market, 5 cities that in the balance market, and 5 cities that in the buyer's market. Buyer's market. This shift, the buyer market means the buyer has way more negotiation power, even though there's 7 cities in the seller's market, but they're also moving toward the buyer side. Okay, there's some decline there. Um, and here's some example right here. You see Queen Creek is negative 9%. Gilbert, even though right now is still in a seller market, but still show a negative 5%. Glendale negative 5%. Chandler and Scottsdale negative 4%, right? And all of these showing the negative change. All right, that means moving toward favorable to the buyers. This is not only the asking price, but also the power of the buyers gaining in a lot of city across Maricopa County. Okay, next slide. I want to talk about interest rate. Right, we have been let's look at the treasury yield, okay, because that is actually the interest rate follow that very well. Okay, it has been dropped. It has dropped 4.79% in January. Okay, and let's see, so and 4.16 in early March. Okay, this indication, this change should have led to more significant drop in mortgage rate. But the lender are keeping their margin high due to the perceived in market risk, right? So as a result, you see here, the 30 years fixed interest rate has only dropped slightly. You see here, this blue line right here is a significant drop, okay, from 4.79 here to 4.16, right? However, the interest rate also does drop, but it's not as steep as the 10 years treasury. It's dropping from around 7% to right now maybe like 6.7 or 6.8%. Not much change compared to the 10-year treasury. Okay. While this is an improvement, it has not triggered a wave of new buyers. Right? So I think it's because the change is not much. Okay, so it's not doesn't result a lot of demand on the market. As a result, the number of homes under contract is close to last year numbers, which is not a great sign because we want more under contract home so that we have more closed sales, right? So that the market is better. The last time pending sales were this low in early March was back in 2008. All right. Now we're talking about early March. Okay. Normally, because the reason is that normally March time is the best time to sell for Arizona home seller. Okay. March and April. All right. So we're expecting an increase rather than a decrease right now. Okay. What is the bottom line here? If the mortgage rate drop another 0.5%, we could see some significant boost there in demand. Okay. But until then, we remain in a market that where the buyer has an edge and the sellers need to adjust their expectation. All right. So okay, so let's say, so right now the as you see here, the dashed line is the number of pending home sales in 2024, and 2025 is right below it right there. So it's not a great size for everyone. Okay. All right. Now let's talk about some high-end market. Okay, they have less impact. Okay, as you see luxury here. Okay, luxury real estate in Arizona tend to move independently with mortgage rate fluctuation. Okay, since high-end buyers are often buy with cash, even though it is a luxury property, but they still buy with cash, right? And or they may have some alternative financing that only for the people who has a lot of money, right? The bank might offer you a lower interest rate even because they have a lot of cash in the bank, right? Um, so, oh, sorry, this is a prediction. So recently, however, there's one thing that we could shake up the top tier market is the volat volatility in the financial market, right? This is very high impact and we need to watch this, okay? We've seen money move from stocks into safer assets like treasury bonds, and which has helped bring down the bond yield, okay? So if financial market remains shaky for an extended period, luxury buyers might become more cautious and leading to a slowdown at the top end as well. Okay, so we have to watch the financial market more closely and to make sure that there's nothing changed, because this is going to be a very high impact to the luxury market. Okay, for now the luxury market is safe. All right. So what next? Here's some prediction. Okay, here's some prediction for the spring market. Okay, more inventory will continue hitting the market, and if this trend keeps up, the buyers will have more options and further increase their negotiation power. Not a good news for the seller. Mortgage rate remained a wild card. If we see another 0.5% drop, we could see a stronger spring market, and therefore there's going to be more buyers back to the market. If not, we expect continued slow demand. Okay, sellers should be prepared for longer selling times. Right, they don't expect like quick 1 or 2 week. Okay, longer time and more negotiation gonna happening. The days of quick and over asking price are over. Okay, behind the seller, except of course there's always an exception, right? Highly desirable homes in prime locations. Advice for the buyers again: take your advantage of this market shift, and with more option and less competition, and you have the upper hand in negotiation. All right. For the seller, be more realistic. Be more realistic. Okay, with pricing, and consider offer concession upfront. The home that are sell quickly are those that are priced right and moved in ready. So any question, and if you have any question about the real estate market nowadays, just let me know, and I will be more than happy to share with you the information, the data that I collect. In the meantime, thank you so much for watching the show, and I'm looking forward for you to see you again in next episode.